And greetings, agents of impact. It's been so good to see so many of you out and about the last couple of weeks, and we're looking forward to seeing more of you out here at SOCAP in a few weeks. It's also nice to have you on our sort of home ground here on one of these agents of impact calls, and from so many parts of the world and so many different places. We didn't quite know that the polarities would be quite so extreme when we planned this call. We sort of cast it as, sort of upsides and downsides, but we do hope that all of your families and friends are safe. And just want to take a minute at the top here and acknowledge and reflect and grieve, not only, but including the people in Israel and Gaza. So for me, it does feel like one of these sort of before and after moments. I don't quite know, what to make of it. And I don't think we can really do justice to it on this call. So I'm hoping we can kind of come together around the work ahead. And I'd welcome any of your thoughts and what you're thinking and feeling. And if you want to send me a note, either privately or for publication to editor@impactalpha.com, I'd really think we could use some kind of collective intelligence here. But let's go on to the call as planned, as it were. I want to introduce our guests, but first I want you to introduce yourselves, so we know who's on the call. And if you want, just given, it's a sort of impact investing call, if you want to label yourself or identify yourself in sort of what role you play, GP, LP, entrepreneur, advisor, consultant, academic, other, fill in the blank, that would be great. And if you want to put in a question or a topic or a keyword, a hashtag of what you'd like to discuss around state of the field, that would be great as well. So just to say hello, Monique Aiken, one of our podcast co-hosts every other week, and also host of our Reconstruction podcast a couple years back, and now host of your own new podcast, Monique, Into the Record. And also a children's book coming out. So congratulations on all that and welcome.
It's been a busy last few weeks.
And you got a day job too, I think.
Also my day job. I am MD Director at TIIP, the Investment Integration Project, which is connecting systems thinking of investing through consulting and research. I also am the co-founder of a nonprofit collective called Make Justice Normal. And we're thinking about narrative change at this period of time to achieve the name, Making Justice Normal. And that's who we've done the podcast with. And also I am the co-founder of an initiative called the Restarter Fund, which is thinking about economic justice and climate justice in these unique times for small businesses. But I'll pass them on.
Okay, that sounds like about 4 jobs, but you get it done somehow. So welcome. And Fran, everybody knows Fran Seegull. We've been tracking policy with the Alliance and a partnership around what we call our policy corner. And Fran has been a mainstay of these state of the field roundups for, what were you telling me, Fran, like 10 years?
Yeah, we started the annual State of the Field roundup at SOCAP about 10 years ago, and we're excited to bring it to the Agents of ImpactAlpha call today.
Well, welcome. And Cathy, another one of our original go-to partners on all topics for sharp thinking and can-do energy. You created that terrific Coursera course that I think thousands of folks have taken, and we were delighted to excerpt it on our Optimizing Impact series last year. So Cathy, welcome.
Thank you. So glad to be here.
So I can't think of any 3 better folks to sort of take stock here. Monique, let's start with you. People are talking. I was just at the gin. The poly crisis was sort of the word of, and this was before some of the recent events. Just give us your thought on sort of what the zeitgeist is, where we stand here as we take stock of the year behind and the year ahead.
Yeah, I mean, I think this is a moment. There's a lot to celebrate in terms of our progress on impact investing in the sustainable finance movement. Yet there's also been significant tragedies, as we started to hint at, between the earthquakes, the floods, the fires that have devastated communities all over the world, not to mention the loss of life and conflict, as you just mentioned. And of course, there's been a downshift back into extreme poverty for many people in the global south, precipitated by the pandemic. And of course, closer to home in the United States, the rollback on human rights and progress, political gridlock, increasing houselessness. This is a complex reality, and we and I have to hold two truths that might seem diametrically opposed to each other at the same time. But if that thought is applied to our work in pushing the frontiers of finance, while there's progress made, more is needed. And if we take just the number of folks willing to sign on to the Principles for Responsible Investing as just a signal, that number had multiplied from 63 in 2006 to over 3,800 in 2021, according to their website. That represents over $100 trillion. Yet it's still not enough to address these polycrises that we just mentioned. Another imperfect proxy for that "might not enough" comment is that according to the 2023 Sustainable Development Report, 85% of all SDG indicators are off track, and none of them are on track for achievement by 2030, and some are even showing reversal. In July, a UN Conference on Trade and Development report cited $2 trillion in the gap for investment towards an energy transition. I think I really like this graphic, and I would like to, well, couldn't put it in the chat right now, but there's a graphic from Future Earth. That's a report from 2020 that shows interconnected green lines, like a spider's web with different colored dots representing issuers with potential to lead into global potential crisis. It's like everything, everywhere, all at once, like that movie title. But that graphic allows us to visualize the simultaneous risks at play, from the environmental to societal to financial, from interstate conflict to democratic fragility to pandemics and social unrest. And that graphic was from 2020. Does all of this sound familiar? It still describes us right now. But all that's to say is that we still have time to get it right. All is not lost, and despite what it might sound like, I'm actually an optimist, because on the other side of risk identification and this process is clarity about the things we need to do, the work we need to collectively prioritize, and there's significant opportunity in both mitigation work and value creation to be had from innovations that address all of these challenges. So I'll pause there and just say, point is, both, there's a lot happening, lots of tragedy, but at the same time, there's opportunity.
Split screen, I think, was one word we used a couple of weeks back. And part of that was when you go to places like Climate Week and others, the energy is on fire. So there sort of is this very distinct sort of two things all at once, as you say, Monique. Fran, just tell us a little about sort of the tailwinds, as people call them in policy.
Mm-hmm. Yeah, so building on what Monique shared, we are having increasing, sometimes daily, personal confrontation with the climate crisis. I think back to 2020 and 2021 and some of the conversations, David, we've had about this at that time, the promise of a reimagined economy and society coming out of the pandemic, coming out of the 2020 crises, and feel like that has largely not been met, those promises. But like Monique, we think that there's a lot of room for hope and optimism, particularly when we reflect on the unprecedented level of progress that we've made in the public policy arena in the last few years. So to start, we've seen a substantial uptake of our shared priorities at the highest level of government. So there are two relatively new congressional caucuses taking up our issues. One is the Stakeholder Capitalism Caucus, the other is the Sustainable Investment Caucus. There's also the Interagency Community Investment Committee, ICIC, which comprises the 6 major economic agencies: Treasury, HUD, Commerce, Agriculture, SBA, and Department of Transportation, all working together in an interagency fashion to understand how to make some of our most important community investing incentives more interoperable and more accessible to a wide range of constituencies. And David, you touched on Climate Week, which was wild. It was in New York, it was Climate Week, UNGA Week, and Clinton Global Initiative. So it was quite a swirl of activities. And one of the things we reflected on is the 1-year anniversary of the signing of the Historic Inflation Reduction Act, IRA, which is the most significant climate action by Congress to date. IRA paired with the bipartisan infrastructure law, the CHIPS and Science Act, means that trillions of federal dollars and private sector investments will be flowing into sustainable infrastructure projects, community economic development, and the clean energy transition. This is a huge opportunity for us as impact investors to monitor and make sure that there's successful and equitable implementation of these major spending bills. So that's a place that we can engage. We had a great opportunity to do an event at Ford Foundation in partnership with Ford and Impact Assets during Climate Week. We brought together over 100 impact investors, philanthropic actors, corporates, and policy leaders, and came away from those discussions and Climate Week really humbled by the magnitude of the work ahead, but also energized by the combined will of what we heard from the public sector and the private sector leaders in the room, and the shared intention to go all in on both climate investment with an eye toward environmental justice. And then finally, there are applications due to the EPA later this month, and many around the tremendous opportunity at hand with the Greenhouse Gas Reduction Fund, which is a $27 billion fund within the EPA, part of the Inflation Reduction Act. And I think that capital flowing, which is grant capital that then can be on-lent or invested in equity or regranted, is this unprecedented opportunity for those of us that really care about historically underserved and economically disadvantaged communities. So we see community development finance institutions and green bank leaders putting the finishing touches on their applications to receive these funds. And they will be subject to the President's executive order, the Justice 40 executive order, which demands that 40%, at least 40% of all climate benefit needs to go to underserved communities. So this is a tremendous tailwinds from the federal government, and it's our opportunity in the private sector to step up and make sure we meet this moment.
Terrific. That last is the Greenhouse Gas Reduction Initiative, sometimes colloquially called the Green Bank, although I know there's not like one green bank, but it's kind of a green bank financing mechanism. As you say, there's a lot of activity around that. So Cathy, take us just a little bit more broadly. Let me just toss it to you as broadly as possible, which is we always wanted impact investing to go mainstream. It seems like it has. What now?
Yeah, thank you. First of all, can I just say how thrilled I am to be doing this with these two women and ImpactAlpha. We look forward to this every single year. And I loved Monique's comments about kind of the urgency and the opportunity, and Fran's comments about how regulations and excitement is growing. I kind of want to add my comments kind of from the practitioner's point of view. Those of us who have been in the impact investing field for a long time have been talking about mainstreaming, for decades. I think it's getting real. I think, as we get closer to what are the systems of disclosure and communication that are going to be required, and what do people actually have to change in what they do in reaction to this, that's where the pushback is coming from. So it's almost like we're getting really close to the heat, and the heat is coming back, and that's actually a good thing. From my point of view as a teacher, I also feel that the confusion about what to do about that, should I lean in, should I lean back, is an opportunity. It's an opportunity for much broader education, and we can all be taking advantage of that. One of the things that I was thinking about, especially as Fran was talking about Climate Week, and something that comes up often with my students, is they're like, well, the E in ESG seems much easier. It seems easier to measure. It seems easier to understand. I don't know about you, but I've seen, many conferences over the past few years has at least one panel where someone's saying, what do we do about the S in ESG? As if it's kind of the stepchild, and, we don't know what to measure. It's hard. I just want to, kind of remind us, most of the SDGs are effects on people, right? Most of them are, what are we doing to educate people? What are we doing about people's health? Most of the E metrics are actually about what the E factors are going to do to people as well. And so I just want to bring us back to, we have this incredible opportunity to leverage more attention on how well business and society is meeting the needs of people's experience. And that's kind of what impact is all about. I also wanted to mention, of course, there's a history in our field of gender lens investing, which is a movement due in no small part to the work of my dear friend Suzanne Beagle, who passed away earlier this month. Which is a way of saying, there's a way that you can kind of tighten a lens around a particular segment of people and start to really understand what is it that drives the difference in their experience and the different roles that they may be in. And I love the fact, we're going to hear some comments from some people from 2X, which is the organization that she contributed to later in the call. But I feel like what's really exciting right now, and I have the great privilege, sometimes it doesn't seem that way, but it truly is, of encountering, 20-somethings who are new to this field every single year, and trying to make sense of it. And, there's just a lot more opportunity because businesses are investing time and resources in managing not just sustainability, but also looking at how their work affects people, customers, workers, suppliers, communities, and that's not going to change. The other thing I wanted to mention is that you kind of see that beginner mindset is expanding among many different kinds of people. David mentioned our Coursera course, we launched 2 years ago, almost exactly 2 years ago in a month, which is looking at how do you practice impact measurement and management to align with the SDGs. 25,000 people have taken that course in the past 2 years, and it's continuing to be about 1,000 a month. So that's a sign of the continued demand for understanding, how do I do this? Not how do I read about it or what's the policy, but how do I change what I do every day? And I'm very optimistic about that in the big picture.
Terrific, thank you. Yeah, practitioners, we always say follow the talent, and as you say in schools like Duke's business school and others is flowing in this direction. Fran, some folks will remember that we did do one of these calls on the year of the S. And you even coined scope 3 for social. So there is a lot of work going on there, as you say, but there has also been, as you've been at the forefront of trying to strategize against a backlash against ESG. Certainly, if you look back at the last year, that's one of the main themes. So where do we stand on that front?
Yeah. So now time for some headwinds. As Cathy just mentioned, we have been, as a field, as an impact investing field, operating at the relative margins as a niche practice on the margins to the broader public and private capital markets. And we've seen over the last 5 years plus a mainstreaming of our work, and even a belief that our work and our approach to deploying capital for impact can transform finance over time. We're getting larger as a market. The GIN last year at their annual conference sized the market at over $1 trillion in assets for impact. If you look at the US SIF number or the global SIF number, it's multiple trillions of dollars. And we are drawing, and Cathy, you said, we've been drawn to kind of the heat, and now we're in the crosshairs, and wanted to talk a little bit about the politicization of ESG, just to make it clear, because this comes up all the time, is that ESG is not impact investing, and impact investing is ESG, and increasingly at the Alliance, we're seeing this really, this kind of pairing of financial considerations and impact considerations along a spectrum. And ESG is not the same as impact investing, but we see it as part of a broader whole. And we have seen a rise in the anti-ESG movement over the last year plus, although the Alliance has been tracking the antecedents of the anti-ESG movement since 2017, 2018. And we see it now as a fully formed, well-funded, well-coordinated movement that seeks to undermine and politicize ESG investing practices and corporate ESG practices. the folks that are leading this movement are intentionally muddying the waters to cast doubt on the financial relevance of things like climate risk and workforce diversity, and seek to demonize investors, companies, financial institutions, asset managers that take these factors into account, even when they're demonstrated to be financially material. So again, this goes beyond ESG to any pairing. We see this as an existential threat to the broader pairing of financial and impact considerations, as I mentioned a moment ago. Last year, the anti-ESG movement was largely concentrated in red states, where policymakers have prohibited or tried to prohibit state government from investing in, through their state pension funds, for investing in or doing business with firms and companies that implement ESG strategies and ESG considerations. This year, we're seeing more anti-ESG activity at the federal level, including a set of hearings and bills introduced by the House Financial Services Committee during the so-called ESG July. These bills are not expected to pass, but they're concerning nevertheless. And we're also hearing that these anti-ESG attacks have been having an effect on the market. Reportedly, investment committees are increasingly assessing the risk of the anti-ESG movement to their strategies. Many companies are de-emphasizing ESG in their publicly facing communications. McDonald's relatively recently scrubbed sustainability and ESG from their websites. And we're also seeing a rising antitrust threat around net zero commitments, whether it was GFANZ, or the Climate Action 100 commitments. So and of course, the anti-ESG movement is closely tied to the platforms of certain politicians on the right. I just wanted to say one more tidbit, it's an important one, that we see the anti-ESG movement in the context of a broader movement that includes anti-DEI action. So we know that the Supreme Court struck down affirmative action in higher education, and now we're seeing the private sector ripple effects of the SCOTUS decisions. There have been subsequent legal actions challenging diversity in lending, diversity in venture capital, and diversity on boards. And so we see this as all part of the same movement. And it's really important as an impact investing movement that we partner with like-minded corporations, investors, and others to push back. And there's a lot of good work being done in that regard.
Thank you, Fran. Yeah, you mentioned the sort of legal strategy, coordinated legal strategy. I think a lot of good reporting has come out about how non-spontaneous these efforts are. But I also wonder whether at the political level, I think at the legislative level, there's still a lot of lobbying that's pushing this. But at the sort of political messaging level, it seems to have kind of fallen flat. And even some of the politicians you mentioned who were sort of riding that horse for a while seem to have gotten off of it. And I think it didn't really poll well, maybe, with the actual public to that they actually think defending workers' rights is actually a good thing, and looking out for even environmental sustainability can be a good thing, and that just political meddling in business is maybe a bad thing. So so I think maybe that would be the sort of silver lining at some level, is that it seems to have crested in a way at least as a political message. Monique, or anybody actually, just take off on that. How do you think about the sort of array on the backlash and then the counter backlash, the backlash to the backlash?
Well, I think someone said somewhere, and I wish I could tell you who, that all of this activity can be interpreted as the increasingly desperate last gasp of the dying animal. And so well-funded though they may be, I think, there's an opportunity in this, and that, well, let me start here. I think my 4-year-old closes his eyes and he says, "You can't see me, Mommy, I'm invisible." That doesn't mean he is. So, of course, this anti-ESG stuff is kind of the same thing to me. Like, what are you saying? That it's not here? What is? Which, in my business school courses, that was not what I was taught, and that all material information should be incorporated into valuation. And actually, perhaps this will end where we think that not doing so is a dereliction of duty. And there's a great blog post that I like to cite from Cheryl to Common, which I'll post here, which talks about a perspective on this is for the right. This is actually internalogically inconsistent. So it's kind of a surprise that this is coming from that side. So there must be other reasons, since again, the logic is not holding. But ultimately, I'm hopeful that all of this opposition can be meaningfully leveraged to update fiduciary duty guidelines that have long been a smokescreen for inaction, to explicitly write in material, environmental, societal, and governance factors, name systemic risks in these guidelines so that we can no longer leave it open to the misinterpretations that have preceded this moment. And I'd like to just give a shout out to George Suttle's generation of fresh fields for their work in calling for this clarity. And, you know, the point is it's working, or else they wouldn't be attacking us so hard and trying to stop us. And that maybe one day we'll look back at this moment in history as the pivot point on the path towards changing the system, and where the march towards general understanding of the truism that all investing can impact complements this Clara Miller, and that we will take this in action for those who do take the tack of inaction as a choice, and for which we will be able to ultimately hold folks to account. I think, you know, Gabriel Fimi's here. He mentioned in the chat here about the letter last month that he and others received, so perhaps we can talk about it a little bit later. But I think on the global stage, this is not holding water. The anti-ESG movement is certainly not just in the United States, but we have folks who are like Mia Motley and others. Of course, she's a personal inspiration to me. Like, they're not going backwards. We're going forwards, and strongly on climate, on gender, on decolonialization. You know, there's other points for an opportunity to reframe. I think this is partly we've let others sort of push this dialogue and define for us, and we then, of course, have to respond to the frame that is given. But one of the reasons for optimism is I think that there's other ways around it. And talking about systems is one of those ways that I like to think about. And some of TIIP's clients and other stakeholders who are part of our network have found that it's a useful frame. And of course, Bill was just in Tokyo. He published a piece in ImpactAlpha. I'll put it here. You know, thinking about systems and talking about systems lets us free in some ways of some of this baggage of previous existing terms that others want to define, and that, you know, fighting against others' definitions is always going to be a losing game. Shout out to the case made for the idea of not letting others sort of frame a dialogue in order to be able to fight on fair ground. And so, you know, the piece that he wrote, basically the systems thinking connection with investing seems to be working. And for us, we have what we're calling like a program of learners thinking about system level investing, and we thought that we'd have 10. And we launched that in June with 29. And that is also a point for optimism, that people are going to use other ways of thinking about risk in order to be able to deliver on the change making that we're talking about. So, you know, I'm excited for us to take this as an opportunity to let that dying animal gasp and fight back.
Thank you. Fran, did you have your hand up to add something?
Just really quickly, I think that, you know, some of us, you know, we're listening to the first Republican presidential debate, and we're delighted to not hear anti-ESG rhetoric and woke capitalism. But, you know, and it may be that the American public doesn't know what ESG is, so they may feel like it's not polling well. But make no mistake, these are this is a sophisticated, well-funded effort, and to claim any kind of victory because Vivek Ramaswamy decided not to use woke capitalism in one debate, I think is a real mistake. We need to continue to push. Yes, some of the state bills were voted down, but these policies are being entertained at the federal level, which is really concerning. Even if certain bills won't pass, the president used his first presidential veto to allow ERISA-regulated pension fund fiduciaries to take impact factors into account. I want to live in a world where there's double materiality in the United States, but honestly, we are fighting for our right to have fiduciaries take single materiality into effect. So while we are making a lot of bets with a range of assets on the medium and long term, and see system level investing as a gateway potentially to double materiality, we are not taking our eye off the ball of defending single materiality, which puts us in our capital markets way on the back foot compared to global capital markets.
Yeah. Well, I wasn't trying to be overly optimistic. I was just searching for some kind of silver lining.
A shred of hope.
And I thought, Monique, when you said your 4-year-old, that you were going to say that Levi has a position on these ESG questions, but I guess maybe not quite yet. But
probably does. We just need to talk about it later.
But Cathy, the point is that some of the backlash actually has brought ESG to sort of public awareness in a way that it hadn't before, and there's then, as you said earlier, I think a certain level of confusion, or maybe an open moment where people are saying, what is this thing? So what are those kind of opportunities?
Yeah, I was just gonna, it might be a smaller lens than Fran's in terms of the threat coming from the federal government, but I do think that every day there are people making decisions about, what do I do differently, right? If I'm inside a big company, or I'm inside an investment firm, if I'm domestically located in the US, or if I have global presence, right? Everyone's interpreting this slightly different. The pace and seriousness of the global policy community around these issues is not going away in any shape or form. And so we may be forced at some point, through the fact that we have so many global corporations and others who must align with that. I also just think it's an opportunity, as Fran said, what is ESG? ESG has suffered for a very long time from being a box that different people can put different things in. And so the backlash is against kind of a container, not specific things. And I think it's a really great opportunity when people are going into organizations to be like, what are the things that you're actually trying to manage differently? You don't need the acronym to do that. And so, last year, I remember there was a big panel at the beginning of SOCAP about, is ESG helping us or hurting us? And I kind of thought of it as an on-ramp, right? If people get on the ESG on-ramp, then they'll eventually get to deep impact, and then we'll have them. Now I kind of think of it as like, it's a caution sign on the way, right? As people are looking at it and saying, we might want to manage some of these material things, but we're not really sure what those are for us. And we're not really sure we need to do it, quite that way yet. But we do know that we're facing, as Monique said, material risks all over the place, and that we want to have a positive impact on some other things that we care about. And so, just from within my experience, and I know I'll wrap this up because I know we want to get to the next topic, is I have students who go and do work over the summer. 2 of them reported that their job in financial institutions this summer was to take ESG out of everything. And 2 other ones reported that they were going around the entire company trying to figure out how to align with the UN PRI, right? So both of these things are happening, which is strip away the language and keep doing the work in most of these institutions, because they know they have to manage this. So I think as a community, we have this great opportunity to say, here are the practices that actually are inherent to managing impact. They are more in demand among investors and corporates than ever before. And so I feel like our job is to make sure those things don't get watered down in the political maelstrom going on at a higher level.
Well, that is a perfect segue to the next topic, which actually is about practice and practitioners, and sort of what the sort of community of impact investing can do to sort of help the sort of development of impact integrity, transparency, accountability, and that's back to you, Cathy. So, what are the developments on that front?
Yeah, I think that advancing the field with integrity is actually getting easier. I think that we have created a nomenclature and a set of tools and a set of understandings. It's taken 20 years for us in the impact investing field to do that. ImpactAlpha has been a huge part of that, as have other organizations and networks. But investors are starting to truly up their game. And I wanted to just give 2 small examples of that. One is we've been working with Impact Frontiers and are starting to see, which is a group that's training asset managers and asset owners how to strengthen their own impact management practices and start to understand how to move the dial so they can have more impact and more return at the same time, which sounds like pie in the sky, but it's starting to happen. What we're seeing there is a new baseline among hundreds of impact investors who are starting to create custom impact ratings or impact scorecards, so they can start to delineate at the beginning the investments that are best aligned with their dimensions of impact, and that also that they can then start to manage those portfolios with much greater care and dedication. That is a undeniable trend. The second one is that attention to how do we define impact and how are we being accountable to it is going upstream to the people who invest in impact funds, the LPs or limited partners. We just did a study over a year with funding from the Tipping Point Fund, and we're about to release a new report in partnership with Bluemark, which is providing guidance to those LPs who are saying, we've already been doing ESG management, and that seems kind of limited. How do we actually do impact management? How do we understand how to vet and diligence and manage differently when we are trying to be accountable to our own stakeholders around impact on people and planet? And they want to go beyond risk management. And we're very excited. The interviews that we did show that there are tons of examples of people doing this extremely well. And we've tried to make it really simple for other people to follow. We're going to be launching that report with a webinar on November 8th. And I hope that some of the people here will join us and give us some feedback.
Terrific. So there's just want to sort of put an underline on two things. One is the role of LPs in pressing both GPs and also asset managers and various sorts. So the asset owners saying, as you say, wanting to move further. And then the second is just the broad trend. And actually, you raised it too, Fran and Monique, from ESG to impact, from sort of operations and transparency and disclosure, all those good things, but actually to impact outcomes seems to be a trend that people are seeing and embracing. So Fran, there's some specific things I think you want to raise about sort of the state of play in policy out here in California. We're excited about this new climate disclosure law. We take pride that we actually have some influence on the rest of the country sometimes as well. So what's going on about disclosure and other sort of transparency issues?
Yeah, oftentimes California leads, especially in the environmental realm. So the Alliance does a lot of work, as folks know, on the role of regulation as it relates to the future of financial markets. And just wanted to lift up some new requirements for corporations, asset managers, to report on impact factors like climate risk and workforce data. This builds on something that Cathy talked about a moment ago. So I mentioned the Inflation Reduction Act and Infrastructure Bill, CHIPS and Science Act as once in a lifetime opportunity. We're presented with, I think it's beyond once in a lifetime opportunity. It's like a once in a forever opportunity to advance true impact transparency to grow global regulation. And we have been working as a field in many ways to advance impact transparency. We believe, Monique quoted the great Clara Miller, that all investing has an impact, but the impact is either largely or wholly opaque to stakeholders. And once we can reveal impact transparency, then we can get to impact accountability. And I think then that's the gateway to an impact economy. So as Cathy indicated, others are leading in this area. So the International Sustainability Standards Board, called the ISSB, is a new body from the IFRS Foundation, which itself sets accounting standards for over 145 non-US jurisdictions. It's basically the world ex-US. They released a couple months ago its final general sustainability and climate-related corporate disclosure standards, and they're gearing up to do their next round of standard setting. Because they're accounting standards board, they focus exclusively, at least for now, on those ESG factors or impact factors that are financially material. There's a higher bar that comes from the European Union, that has promulgated rules around a sustainability disclosure regime for corporations and asset managers based on double materiality. So not just the financially material impact factors that affect enterprise value and shareholder value, which is what the IFRS is focused on, but also the impact materiality rendered by companies onto stakeholders. Those are, I would say, the ISSB is setting a global baseline. The EU is setting a high bar. And I think where we'll end up with the SEC will probably be a floor, unfortunately. We're closely tracking the SEC on their disclosure and transparency agenda. Last month, they issued final rules on the fund names rule, which requires ESG funds to prove that 80% of their portfolio matches the asset advertised by its name in an attempt to crack down on greenwashing. The SEC has issued a couple of fines, actually, to asset managers in that regard. Of course, we're waiting on the final rule mandating corporate climate disclosure, and many are concerned that the final rule will be stripped of Scope 3 greenhouse gas emissions or supply chain emissions, where the majority of a company's emissions show up. David mentioned that the California Senate and General Assembly passed, and I believe that the governor signed over the weekend, a historic pair of bills that would require corporate disclosure of greenhouse gas emissions, including Scope 3, from large companies, including private companies, publicly traded and private companies that do business in the state, which is an enormous swath. And lastly, of course, we're actively pushing the SEC to prioritize the highly anticipated corporate human capital management disclosure rulemaking, which would establish clear, comparable, quantitative, decision-useful metrics around a company's workforce. So each of these rulings we think are critical to ensure the integrity of the ESG and impact investing market. And we hope over time will help deliver and manifest an impact economy that we have been working toward for quite some time.
Terrific. There's a lot of acronyms and whatnot in
I
there.
know,
But
David.
you did a great job. I'm just going to say we unpack some of them in the policy corner. ISSB, double materiality. So
I feel like when I talk, I'm like the Peanuts in the Peanut strip. That I'm like the teacher, and I'm like wah 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 wah. Like I see her mouth is moving, but I don't really. Anyway, I hope I was able to break it down.
Policy wonks unite.
We did even mention dynamic materiality, just to throw a monkey wrench into everything, but that's maybe a whole other call.
Single materiality, double, and dynamics. Why don't you take that? There was one question I think you wanted to pick up on, was just that as Fran said, much of this has been public markets. A very little bit of it is private markets, but private markets is where a lot of impact investors play. So just sort of flesh that out, Monique.
Yeah, just a small point on that is that sunlight is the best medicine, but for a lot of these regulations, it doesn't cover that big group who are not subject to these kind of regulations. Global private equity is about $2.4 trillion, according to a McKinsey report. Global philanthropy is about $2.3 trillion. Not to mention all those private companies in the United States and small nonprofits, big nonprofits in the US, around the world, who won't be covered. And what they are doing also has an effect on all of this, all party to how capital moves in our world. I also just want to appreciate the role of journalism and all that's going on to bring light to things, and to the work of ImpactAlpha and others to bring coherence to the market and really cover what is happening, so that we tell the truth loudly. We might just mess around and change the world, right? Because it is what's happening. It does matter. It affects lives, that we talked about earlier, that Cathy Clark so nicely said. When we talk, ultimately this is about humans, and we should not have to convince people to care about them. But just think about if all of these dollars were going to mitigate these most acute needs and move the most effective leverage points to get these systemic risks more under control, mitigated in various ways. Like, imagine what the world would be like. And just lastly, on the point of measurement, TIIP is coming out with a white paper in the next few weeks measuring system level investing progress, also with thanks to Fran and the Tipping Point Fund for their support. And the goal of our project is to guide investors from public and private markets to build on existing sustainability and impact measurement frameworks to better understand the direct impact on these social environmental issues we've talked about, and also adding to that thought the influence on the social and environmental systems that make profitable investment possible, and to also promote global well-being. So we're excited for that too, and hopefully that will be a meaningful addition to the body of knowledge that we're all talking about.
Great. So a lot of things coming up as well, which we will endeavor to flag in Impact Alphas and in the post around this. Okay, now we've come to the lightning round. We're only a few minutes behind, so do keep it tight. And we want to get to questions. We can run a little bit over the hour if people can stay. But the lightning round is sort of the call to action of what you want folks to take away from this call. I think Cathy, you get the first at bat.
I'm going to reiterate what I've said already, so it'll be quick, which is to forget the acronyms and focus on practice. And the disclosure regulations, as Fran said, are often floors, right? They are the minimum required behavior that jurisdictions have decided must be in place. But to really do impact well, you need to go above and beyond that. And so I just want to say, keep focusing on targets and progress and what you need to do within your world to advance impact on the things that you care about.
I love that. I love that. Fran, take it. Final thought. Lightning round.
A couple things. One is we don't think this is a time for either doomerism or naive optimism. We need to swing into action as a sector to coordinate the flow of public and private sector capital and resources, given this historic confluence, trillions of dollars flowing from the US government. The second is we have caught the attention because of our rapid growth and mainstreaming of bad faith actors who want to politicize and undermine the pairing of financial and impact considerations. And it's up to our community to push back and reclaim the narrative, as Monique mentioned earlier. And finally, on this regulatory side, we are on the precipice of impact transparency, however imperfect it may be. And ensuring that the field continues to scale with impact integrity requires that we go all in on this global regulatory disclosure movement. I know it's not the sexiest thing to do public comment letters, but it's really, really important. And we think that the regulatory disclosure movement and then the private sector, as Cathy said, raising the bar over time on that regulatory disclosure will set the tone for the next decade of impact transparency, accountability, and equity.
Terrific. And Monique, you get the cleanup spot in this round.
So mine's going to be a little personal. So I'm 47, and in 2050 I'll be 74, and I may have grandbabies by then if my son chooses to become a father, who we just talked about before. His name is Levi, and he's 4. He already told me he wants to be an astronaut, a veterinarian, a cop, and a dad. So it's possible. And though that could change, because my sister, when she was 4, wanted to be a strawberry, which of course didn't work out. But I want to be around to see him achieve his dreams, whatever they end up being, and meet those children that he may want to have. So my call to action is that everyone in this Zoom and everyone who listens to it later, help make my dream possible, that both me and my son are alive in 2050. And actually, I just don't want my son to be alive. I want him to be thriving. I have access to clean water, clean air, a job, healthcare, time to rest, time to pursue his passions. But we are on a precipice, and it's a choice of humanity right now to decide collectively, are we going to choose extinction or not? And I don't want just my son to be thriving. I want everyone's sons and daughters to be thriving. I want for the most historically excluded people anywhere and everywhere, and it's in our collective power to raise the floor for everyone and do so in a pro-earth way. Because there's no reality where the disabled Black trans woman in rural Mississippi is thriving and everyone else isn't. And there's no reality where there's women with children in Sudan, Bolivia, Yemen, Micronesia is thriving and everyone else isn't. So if we design a world in which our systems support those women and their children and ensure they are okay by 2050, my son and I will be alive and everyone else will also be thriving in 2050.
a good example of a child lens investing, which is gonna have its day as well. Thank you all. Let's we have a few minutes. We did promise to open it up, so let's do that. I will try to look back at the chat, which I haven't had a chance to do, and my colleagues here will do that as well. But let's bring Sana Kapadi. I think you're with us, and with 2X and Cathy mentioned our dear friend Suzanne. So just give us a quick thought, Sana.
Yeah, happy to, and thank you for this conversation. I mean, I think if I think about the parallels of this conversation with what we're seeing happening in the broader field of gender finance, there's lots of amazing progress and lots that's happened, but so much more to be done. I think, you know, the 27 billion that's been mobilized under the 2X challenge, fantastic, but now we're thinking about greater depth and transparency and impact as well. It's also incredible to see this intersection of gender and climate finance, gender and health, gender and care, and just more intersectionality happen. And I think the aspect that was raised in terms of we're in a moment where we're actually having a conversation on what it means to change the financial architecture of our systems. That's what I feel most excited by. And that's an opportunity in the disclosure, in the standards, to be thinking about how gender and diversity feature in. And each of us has a role to play. I mean, one of the many things that I've learned from Suzanne is that each of us also has an influence that we can have. And so thinking about her endowment and heading for change, really showing how as a personal wealth holder, you can create a demonstration impact portfolio at the intersection of climate and gender finance for what good looks like, and then help to catalyze a broader field. So it's an exciting moment. And I think at Climate Week, someone said the motto is we can, we will, and then we must, because there is no other choice. So yeah, thank you for the opportunity.
Thank you. And just heading for change, as folks know, I think is Suzanne's kind of legacy project around creating a gender and climate fund that's very sort of much open source and available. And ImpactAlpha is very happy and proud to have some role going forward to sort of air that out and bring that to you. So stay tuned on that. And then I think Monique, you mentioned the sort of global stock taking on the SDGs, and I think Jesse Fioli from the UN Global Compact is here. Jesse, are you? Yeah, there you are. You got to unmute yourself. Isaac, can you unmute Jesse? There you go.
There we go. Thank you. Yes, thank you so much for inviting me to join today, and thank you for this conversation. Monique had extended the invitation to attend this, and it's really encouraging to hear so many different people in this space trying to make an impact through their work, through investment. And this year, I'm going to share in the chat, we just recently launched our SDG stock take. And I would like to point your attention to the portion on corporate financing. I believe it's page 68, and I just shared it. And it's giving just a state of where we're at right now in terms of SDG investment. And I think all of you know the magnitude that we can make impact from these statistics. We know that there's a lot to be done, and there's opportunity, and we've seen it being done in several companies that are highlighted in this report. So I encourage you to draw some inspiration from this report and draw some motivation. And if you want more information and you want somewhere to connect, that's what the UN Global Compact is really for. Specifically our CFO coalition, where we are connecting CFOs to come together and speak the same language and identify a path forward through the utilization of their financial resources within their company and within their leadership in the financial sector. But in general, the UN Global Compact is here to really bring everyone together from the private sector to work on the SDGs together and to have that common goal and structure set in place. So thank you all for sharing so many different perspectives here and really important information. And this is the kind of thing that makes change, and having these conversations and convenings. So yes, thank you for having me, and please do use this as a resource.
Terrific, thank you. I just had a chance to scroll through. I can't even get to the top of the chat, but if anybody does want to chime in, you could raise your hand. It strikes me. I think Monique, you called out Gabriel Toomey. I may be saying that wrong. And there's a few comments about the sort of ESG state of the ESG debate, which we took up. If Gabriel, you want to.
Yeah, thank you for inviting me to speak briefly. You just need to know that these letters are going out, and I cannot guarantee you will receive one, but expect to receive one, right? And under advice of our attorneys, what does this mean? Essentially, we lost $2 million in funding for our startup firm, which meant I had to lay people off immediately. The letter was received September 13th.
Just to be clear, this was a letter from the coalition of state AGs from in various states. Yeah,
that's correct. So now I'm Latino, and I run a corporation, and we're dedicated to helping any institution in the world on their transition paths, however they wish to transition. We don't have a prescribed product. What we do is we do very detailed analytics to help others on their transition paths of sustainability, low carbon, and an equitable future. And the corporation was set up so I could give equity to my team. So most of the people on my team have equity, which is really nice because we walk the talk on an equitable future. It's not an advertisement. The point being is that I would talk to your general counsel sooner and expect that you might receive a letter and then what your plan of action would be. For us, we're very small. We just want to survive till next year and then survive the next year. Others, you might be bigger. But just be aware, okay? I'm only raising my hand today. If you want to talk offline, we can talk about it privately, but you need to be aware and expect that you may receive a letter. Thank you.
And that if you do, you're probably not alone, and there's other folks who may have some expertise that they can share with you as well. So thank you for that.
When we're at the risk of does it shut us down or not? We don't think so, but it's a pivotal moment. Thank you.
Yes. One question I'll throw out to you all and anybody in the audience as well. It seems like we've been hearing some maybe tiredness or impatience, I would say maybe is a better word, around the so-called business case, and that the business case in impact and sustainability has largely been, if not proven, in every instance, at least sort of dispelled as an excuse, and that now is the time to kind of be much more bold. And I don't know whether that's, as people have been saying, about just the sort of general level of urgency that people feel, or whether that's an actual reflection on the sort of state of research and data around the business case. But people, I think, are impatient with always having to make this business case, and they're saying, we want this we want this capital to flow, and we want these solutions to be deployed and implemented. I don't know whether you want to take that, but we have a couple of minutes, and just as a sort of rallying cry, if some way, or what you make of that impulse, whether you're even hearing it.
Meaning to do more and do more.
I think to get aside just the narrow, can you achieve both financial returns and impact question that's kind of been the sort of one of the questions in the field for many years, is like, okay, let's call that one done and actually go to a much bolder sort of impact agenda.
I mean, I wish it were done. If you talk to any wealth advisor, especially on traditional wealth advisor platforms, or you talk to the impact investing experts whose job it is to disavow some of these myths to their broad network of thousands of wealth advisors, it's very tough. And I think all of the anti-ESG rhetoric and the articles and the activities and the threatening letters that the last speaker lifted up has cooled things. And so I think for this group, we're beyond it's false dichotomy. Can you have your impact and eat it too? Yes, you can, except when you can't, because sometimes you can't. That kind of nuance is very hard for a broad spectrum of wealth advisors and other actors to hold. And then you're giving, the anti-ESG movement is giving so many more excuses to those who are on the bead to back off. that I think it's a dangerous time for us to take our foot off the gas. And I think we have to understand that we have evolved, and maybe we are tired of the false dichotomy, but it's a trenchant belief within the wealth advisor community and among investment committees. Cathy, I'm sure you have something choice to say about this.
I have a lot to say about it, but not in 5 minutes. I would just say I agree with Fran. The problem is, from an objective research point of view, we're talking about hundreds of different actions and then asking whether those correlate with greater financial, as much financial return as you would have gotten otherwise, or greater financial return. And we can't study it all. And I think there's a bias against it even when we do, right? So there's a whole bunch of meta studies about the financial benefit of managing sustainability risk. Those have been in the marketplace for 30 years. But as Fran said, when you're on the front lines trying to convince a network of people who have a job to do and have thought a certain way, or might I say, business school finance professors, the same deal. The thinking is very, very entrenched, and the data has not been helpful because it's not simple. It's very, very complex. So I would just say I don't think we're done. I don't think we have a check mark on that one yet, David.
Yeah. I would say another threat theme that I heard particularly at the gin last week was that actually the institutionalization and the growth and the mainstreaming, as you particularly said, Cathy, that some of the smaller funds, some of the smaller ventures are finding it hard. At least was one of the things we sort of picked up around the edges of that conference to get attention. That the scale is both good, but also sometimes can leave some folks out of the conversation in some ways. And so I think that's something to be watchful in the next period. Is there any more? We're a few minutes over. Obviously, people might have to go to other things. We often leave these rooms open for a few minutes just to let folks keep it going. I can shut up and put myself on mute if we want to just have a more open conversation. But if somebody wants to chime in, now would be a good time.
I was just going to chime in. There's two comments, one about net impact and one about kind of power. I just wanted to say, in the work that we're doing very in depth through Impact Frontiers with impact investing organizations who are very interested in trying to understand the correlations in their own portfolio between financial performance and impact, they are learning surprising things every single day. And they are starting to realize that there are levers that they can push up and down and truly make a difference. That is so much more interesting to me than another ESG meta study that people ignore, right? So I just wanted to say that the state of practice is actually getting better at that idea of net impact, which is, what's your impact, related to financial return. And it's surprising. It's surprising the things that people think are correlated are often completely uncorrelated and vice versa. And so you have to actually go in depth to a set of actual investments and figure out what's going on. But imagine, the CDFI community 30 years from now, being able to understand, where, when, and how it truly makes a difference in someone's life when they gave them a loan. Right? These are really important things.
Absolutely. Ben, Isaac, can you let folks unmute themselves now? Or else unmute Ben for him. The reason we do this, y'all, is we've had, you may have been on some of the calls, we've had Zoom bombers in the past. So, now I think you
were unmuted.
There you go.
Now you're muted again. So click it again.
One more time, Ben. I think you're
all right.
there.
Thank you so much for letting me speak, and I appreciate so much all the thoughts that have come through. I'm concerned, I guess, in that there aren't more actual investors on a call like this. And what are we learning, about how to coordinate the actual investment world? It seems to me there's not a lot of coordination. There's more competition than there is collaboration. And I just wonder if there's some way that could be highlighted also, as important as policy in the government and how we can change things from that point of view. I think in terms of creating a culture of collaboration in the impact space is something we're missing. So it's just a thought, and if anyone has any response, I'd love to hear it.
Good point. And that is actually something we also heard we were at the Catalytic Capital Consortium meeting in Copenhagen after the GIN meeting, and that was that exact topic was front and center.
Mm-hmm. Any ideas?
Well, I have one idea, which is put more content and resources into ImpactAlpha so we can share it with folks. So that's always my idea, but
Okay.
there are other folks have
happy to do that.
Have other ideas as well.
That was a very glib response, David. I agree, Ben. I do think that there is a lot of both collaboration and competition. There's co-opetition, especially among the nonprofit organizations that work with investors and corporations. And part of that is just a survival mechanism. There's scant grant dollars. If you look at our field, it's so thinly funded with scant grant dollars. And so I think it makes it tough. That said, I was really heartened by the level of radical collaboration that occurred during the crises of 2020 and 2021. And Cathy Clark, for one, spent God knows how many sleepless nights putting together an open document for resources for impact entrepreneurs globally. I think many of us started more radically collaborating and coming more from an abundance mindset versus a scarcity mindset. So I think it's better than it has been traditionally in the past. And I hope that as we have, also generational power transfer to millennials and Gen Zs, I think that's just going to get more and better. But we see at the Alliance certainly radical collaboration as a form of a superpower that we can all use.
Great. Well put. Other thoughts?
I just want to share for those thinking about systems and system level investing. TIIP is trying to cultivate a community of practice around that. We have some free resources available on our product and our SaaS platform that we built called in the co-practice area in order to help those who are trying to learn from what we already have so that everyone doesn't have to do the same homework. And that's really important that we don't accidentally end up working at cross purposes and that we are supporting each other's work. I think that this was not a crowded intersection 5 years ago, and there's many more doing something. And we want to certainly lift up those who are doing things because there's, the marketplace that we're trying to build, and that is different from what conventional finance is the exact same thing, but to the power of outcomes interest. And we are looking at delivering this the same amount of complexity, the same amount of, kind of staffing and rigor and credentialing. All those things need to eventually be germane to our work too. And we're building a whole new system ultimately and asking for all new strategies in some sense. So it's not for the faint of heart, but for those who want to think about the systems part, please contact me. We're trying to ensure that for those who are pushing that particular frontier, we're doing it in a coordinated way, and that ultimately we have a marketplace for all of this innovation and not just random people doing random things, but we're doing the important things that end up actually being game changing.
I did notice that Matt Levine in Bloomberg the other day talked about universal owners and sort of system risks in a very general sort of common sense kind of way. And that does seem to be dawning on people that there are system risks that are going to actually have more effect on their portfolios than stock picking may as well. So universal owners is another hashtag for the coming year, I think. And the point being, of course, that we're all universal owners now because we're, or the ones that have at least something like a 401k or something, index fund investments is, it's not just the big institutions.
I couldn't chat earlier, just wanted to flag that that graphic that I described at the top. It's part of this report that I just added in here. And I tried to just put the graphic alone before, which that was disabled, and sorry that I didn't get a chance to find the actual report until just now.
Well, this has been a terrific conversation. I'm very happy we could keep the tradition alive, Fran, Monique, and Cathy, and extend it. And thanks to all of the agents of impact here. We'll round this all up and push it back out to everybody in Friday's brief, as always, with a replay and everything. And we'll also try to sort of round up some of the chat comments and all of you as well. So until our next Agents of Impact call, thank you for being Agents of Impact, and we'll see you next time.
Thank you.